Hi, everyone from New York. Remember, I was going to tell you the elite banks' wealth buys, the ones that they tell their wealthiest clients to buy in the past week. So I'm going to give you a little snippet of one of these. I said, as well as for my private investment clients on the Great Investments Program, I will give the odd one now and again on social media so you can learn. So, what are the criteria? Well, as you will remember, it is a buy from one of these major wealth managers, so Goldman Sachs Wealth Management, Barclays, and so on, in the past week, either a confirmation or an upgrade. And then we put it through our own filters. Now, these are non-special situation. What do I mean by that? Well, it means they don't meet all my Great Investments Program criteria, minimum criteria of rising monthly momentum, and or they don't meet the value growth income 7, 8, 9, or 10. You might say, well, why the hell are you doing it? Well, I'll show you in a second with one of them. We want ones where there's at least a 40% reasonable target in 12 months. I'll explain how we get to that. And the exit is specified in the video. It has to be multiple reward to risk. So what happened? Well, Morgan Stanley came up with a buy on Tesla. It doesn't meet our minimum criteria as specified previously, which was 7, 8, 9, or 10. By the way, I should say, for those of you on the Great Investments Program, there's 2 from Bank of America, 4 from Barclays I cover, 3 from Citigroup, and 6 from JP Morgan as well. Goldman Sachs Wealth Management didn't have any this week, but we will get some more to you next week. So let's have a look at what we mean by this. Well, that is attractive. Okay, doesn't mean it'll last necessarily. Look, in the past it let us down. However, it seems to be moving in the right direction. October doesn't tend to be a good month for Tesla, so be warned. It is high risk, everything that I'm saying to you here. But the reasonable projection, it's reasonable, doesn't mean it's going to happen, because it's happened in the past. It's an extension of the current one and this, and it's oversold. So what's the reward? Well, the reward, even if you're wrong by a factor of 50%, it's still potentially 100%, potentially, not guaranteed by any means, and it's high risk. So where would you put the stop loss? You would put it below a recent low, which is there, which, as you can see, is, if that's going to be 100%, that's less than 50, so you've got more than a 2-to-1 reward to risk. If you didn't want to lose more than, say, £1,000 if that dropped, you would say, well, looking at the maths of it, you would say that's a 25% stop loss. I don't want to lose more than £1,000, so I will only put £4,000 in, because 25% of 4,000 is 1,000. Okay, at that point, and the 4, if it did double, would go to 8, right? However, what other exits might you use? You don't just want a fixed stop loss. Well, we can worry about that when and if it goes in that direction. You might say, if it drops X, I'll sell Y. For instance, if it drops 25%, I will sell 100%, or if it drops 10%, I'll sell 30%, and so on and so forth. Those exits, we won't do hypotheticals now. This is non-special, it's high risk, but I just wanted to give you an insight. Those who aren't on the program, some of the ones in this trade structure we do, it's a 12-month period. Okay, reward to risk 2-to-1. This is outside of the Great Investments Program, but it's for people within it that I give some of these extra, because some of them want more than just what's in the program. The program would have not included this because it's not a 7, 8, 9, or 10. So just wanted to clarify that and wanted to share and give you some insights. More to follow in due course. Do like and follow for more. Thank you very much.